This is an update on THRY Thrive Holdings. I had mentioned in my previous video here off this primary downtrend line off the new year highs would offer an objective short trade entry coinciding with the 50-day moving average in dual resistance. And that's exactly what we did. Looked like we were going to briefly pop it. Never did. Had the 50-day moving average. Thursday came back out, rallied. Looked like we were going to, hey, it was bullish. It was starting to take out that 50-day moving average, but it ended up closing just on par with it. And that's exactly when we snapped down. Had a beautiful momentum fuel overshoot. And that was good for a 7% drop there. And I've added this 2472 price support now. I believe there's plenty of continuous reactionary highs and lows to help validate that as well. And 2472, we've got a top of the gap now. So really what we've got here, we've got a really what we have is a trio of resistance coinciding with the primary downtrend line, 50-day moving average in the top of the gap, which again would provide another objective short trade entry if we get that snapback and or counter trend rally. And I suspect that move right back down to 2352, 22.8, and then 22.98 for an 11% drop. And if we start to take that out, in my opinion, that will be a sell signal. Once we take out that 22.98, we already have a beautiful overarching, that's what you like to see, a beautiful overarching cut through, undercut 50-day moving average, crossing through that 200-day moving average in a beautiful death cross pattern. And really what you would have is once you knock out that 22.98, things will start to move pretty quickly, in my opinion. Beautiful volume at price gap in between 22.98 and 24.41 for another 8% drop, and that's when things will start to get a little bit more bearish. And we'll probably take out, we'll also take out the neckline of this head and shoulder top here. So I'll change that color up there, and this is the neckline right here. Neckline will be, yeah, just about right here. So yeah, call that 22.98. You burn out the potential positive and or bullish divergences. You react and have that reaction to its zero line on both the oscillator and MACD, and that's as bearish as you can get. Again, snap below this 22.98, and that's going to be a secondary sell signal, in my opinion. Take out that neckline, and again, that's when things start to move quick off the head and shoulder top, off the divergent high with negative and bearish divergences constructed on all three indicators on the crossover on the MACD and oscillator, and smash below its zero line and have been trading right below that zero line ever since. So we'll see what happens. We ended up having to have that potential crossover here on the oscillator, and things will start to get really bearish. But this one's playing out just to the T and respecting all technicals at the fullest order. Hit that like, subscribe button if you enjoyed the video.